Big change in the Fed's statement today was the removal of a previous concern that the Fed had expressed in earlier statements about international financial and economic risks. The Fed has removed this explicit statement about those risks and instead saying it's closely monitoring global financial and economic developments. This is in a sense signaling by the Fed that they are modestly less concerned about the threats from China, for instance, and financial market developments, a soaring dollar, which was earlier one of the big features, or plunging oil prices. So those particular concerns have receded somewhat. However, the Fed isn't necessarily saying that immediately means it's sounding the all clear for the US economy going ahead. The Fed statement about the US economy is pretty mixed, quite balanced, I think it's fair to say. On the one hand, the Fed is saying that growth has slowed in the first quarter. We're expecting that to be confirmed in first quarter GDP numbers on Thursday. On the other hand, they're saying the labour market is still firing on all cylinders. It's continuing to improve. And really, the story of the Fed for the past few quarters has really been trying to balance, on the one hand, fairly soggy activity data, and on the other hand, really resilient corporate hiring data, a rapidly falling unemployment rate, and some nascent signs of higher wages, but only very tentative signs. So the assessment was pretty balanced. The Fed does highlight the slowdown in consumer spending that we've seen recently as a potential concern, and I think that's one definitely worth watching in the first quarter GDP numbers on Thursday. And again, it talks about lower inflation expectations, which is another theme that the Fed has been exploring recently. The inflation expectations in the markets and in surveys have been quite low, and that's something that the central bank doesn't like to see. So the big question, obviously, is when will the Fed next raise interest rates? It raised rates back in December by a quarter point. Really, some policymakers had wanted to move as soon as this meeting, but that is clearly not happened. The Fed left rates unchanged today. The question now turns to June. That's the next policy meeting. The Fed has not strongly signaled that it's ready to raise rates in June. It's saying the risks from overseas have receded somewhat, but that doesn't necessarily mean that it's going all guns blazing into a June hike. It doesn't close the door to a move in June either. But I think there are a number of reasons to question whether it'll be ready to raise rates in June. One of those is the softer numbers that we've seen in the first quarter, although the Fed has said it's not overly concerned about those. The other is the potential for another outbreak of worries in the global financial markets, and the obvious risk on the horizon is the referendum in the United Kingdom over its EU membership. That could create all sorts of uncertainty and jitters once we get to June, that referendum happening just after the Fed's June policy meeting. So that's one reason why the Fed might be a little bit wary of moving as soon as June and might want to kick things over to its July meeting, which is only a few weeks after the June one. So I think we just need to watch really what policymakers say over the coming few weeks, how the economic data pan out, whether they look like that the second quarter is stronger than the first quarter in particular, and listen for signals, particularly from Janet Yellen, as to how confident she is that inflation is returning to target.